Welcome to ShortView Trading. This is your morning market hit for Friday, 23rd of July. What matters today for traders? Well, what a roller coaster ride we've had this week in markets. On Monday, there was a sharp sell-off in risk. The oil price was at the center of that weakness, with WTI closing down 7.5% on Monday. On news over the weekend that OPEC Plus plan to significantly ramp up production. And as you can see, the oil then recovered sharply on Wednesday and yesterday. And linked to that, the bond market rallied at the start of the week, with 10-year Treasury yields closing at 119 on Monday before bouncing back up to their 200-day moving average, currently around 128. Unsurprisingly, with a weaker oil price and lower bond yields, it was the cyclically sensitive parts of the equity market that sold off the hardest at the start of the week. That's the usual pattern. Cyclicals come under pressure when bond yields fall. They underperform the bond proxies and defensive parts of the equity market. And the Russell 2000 is a good example of that. So as yields fell sharply earlier this week, the index sold off and went back to its key technical support level, which is the lows of recent months. And on this occasion, it's a level just above the 200-day moving average. Importantly, our short-term models have been timely this week in picking the key turning points in equities and other risk asset prices. Indicators like this one have been especially useful. It's our main risk appetite scoring system. And as the Russell has sold off sharply this week, you can see it generated a strong buy signal, which worked well. Other models have also generated buy signals pretty much on the day of the low, like this put to call ratio, which turned strong buy earlier this week, suggesting that markets had become fearfully priced and ready to rally. So given that buy message from our models, we've had a long bias towards equity markets this week. The key question, of course, is whether that bias is right and should be held going into next week. Are markets going to continue to recover and push higher, or is it a dead cat bounce and a sucker's rally in which the market then rolls over and goes lower? We answer all of that in our daily trading publication. It's available on the website to subscribers. We also offer a free trial for 7 trading days. If you're interested in that, click on the link below. Simply enter your name and email address, no credit card details required. So what are we watching today? Well, in terms of data and events, we get flash estimates for the market, service and manufacturing sector PMIs coming out of Europe. This morning we get the US numbers at 2:45 London time. And then in terms of earnings, we get more earnings out of the US. Honeywell, American Express, Schulumberger, amongst others. That was your morning market hit. Do follow us on YouTube, search under ShortView Trading. Join us on Twitter, LinkedIn and or Facebook. Thanks for listening.